Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. We made it to the end of the week. It's Friday. It's September 3rd. And so far, September's been a very positive month. I think we've had a new record high every day this week. But today we're under a little pressure. The Dow started down. Well, actually, the Dow, NASDAQ, S&P all started down. Now they're recovering. They'll probably be at a record by the end of the day. But it is very unusual that they would be under pressure the day before a long weekend. Usually before the long weekend, the stock market is up. Now the day after the long weekend, usually the stock market is down. We'll see what happens. Now what I want to talk today about is a battle that's going on between, two hedge funds that are, that have differences of opinion. Now we're going to talk about Cathie Wood's, the ARK, ARKK Innovation ETF, and Michael Burry. Michael Burry, famous for the Big Short movie. He was the one that shorted the housing market and made millions and millions of dollars betting against the housing market. Okay, so these two are disagreeing. Now, Cathie Wood, she has this ARK Innovation ETF, and it's basically has these stocks in it that are, they have PE ratios of, let's just say some as high as 500 to 1 would be a normal, 100 to 1. A lot of the companies aren't even making money, but she thinks these companies are going to explode higher because they're innovators. Now, Michael Burry would disagree with her, and he's saying that this is going to crash because you're not making any money. You have PE ratios in there that are just insane. Okay, let's talk about ETFs and mutual funds in general. Right? All right. So over a 5-year period, 90% of ETFs, 90% of mutual funds will perform less than the S&P 500. Now the S&P 500 is up about 20% this year already. Okay, so how's ARK ETF doing? The ARK ETF is actually down about 4% on the year. The S&P-Y is up 20% and they're down 4%. Why? Well, the year before, they were up 200%. Now, everybody sometimes just thinks that it's going to keep going forever and forever. Now, ARK ETF, off of its high, which hit its high back in February of this year, is down already 25%. Now, technically, that would be a bear market, right? It'd be 20% or more is a bear market. And the ARK ETF has already come down 25%. Now, they hold stocks like Tesla would be one. We got DraftKings would be another. Zoom would be another. These are all these innovative, high-flying stocks. But now, not all of them are doing well. A lot of them don't make money. Most do not make money, and it's coming in. Now, why did I just put a short position on? I'm in agreement with Michael Burry. Now, they can both be right. Let's think about this. Maybe the market comes in and ARK ETF will come in more because it's more, there's more risk involved. When there's more risk involved, the upswings are greater, but the downswings are also greater. So maybe Michael Burry can be right where the market comes in and the ARK ETF comes in another 30-40%. And then it takes off and then Cathie Woods is right. They can both be right. They're both very smart people. I'm not saying they're not. I'm just saying that an ETF does not outperform the S&P 500 more than, take a 5-year average and 90% of them will be below the S&P 500. Okay, so what's going on with the market? Well, right now, the market, we have this melt up. Okay, this melt up since April of 2020, which we're out about 18 months from that now, has doubled. The S&P 500 was trading about 2,200, and now it's up above 4,500. So it's doubled just in the last 18 months. Now, this parabolic move is not sustainable. It is not sustainable. It's going to come in. It's going to revert back to the mean. We are so far above normal that we are in an overvalued market right now. Now, how else do I know this is an overvalued market? Well, you can take the average PE ratio of the S&P 500. It's running around about 36 to 1. Okay, what's normal? about 15 to 17, in that range, and we're over double normal. Now, Warren Buffett has this ratio he uses. He uses the total value of the stock market to the GDP. Now, this ratio, if it's below 100%, the market is cheap. Above 100%, the market is expensive. Well, this ratio is at an all-time high right now. It's at 240%. Now, at some point, it's going to revert back to the mean of 100%. So the market is over doubled by that standard. It's over doubled by the PE of the S&P 500 standard. Now, what about the gold to Dow ratio? That's one I like to talk about. Right now, gold's trading about 1,800, the Dow about 36,000. Okay, that's at a 20 to 1 ratio. 20 to 1 ratio is extremely high. Normal's about 7 to 1. And I keep telling people when this comes to a crash, when it comes to a halt, a ratio between the gold to the Dow is going to be about 1 to 1. And I think they're going to meet, well, probably somewhere around 8 to 10,000. Yes, that's right. I think the Dow Jones will come back down below 10,000. I think the S&P 500, which is trading at 4,500 right now, it's probably going to get down below 1,000 when the crash finally happens. Now, when it blows, I mean, this is going to rock the world, right? I mean, the whole world is going to feel this when it blows. Now, is it going to blow just yet? I don't think so. I think it's been postponed to next year. I think it has. Maybe we can extend it even farther. We print trillions and trillions of dollars. Maybe this whole thing isn't going to blow right away. But let's talk about the S&P 500. Now, it's come down and it's touched the 50-day moving average 7 times this year. 7 times in 2021, it's come down, it's touched the 50-day moving average. Now, what happened every time it did it? It bounces higher. Buy the dip. Buy the dip. That's the big thing that everybody's saying. Buy the dip, and they're making money. They're making a lot of money. But now when it comes down, touches the 200-day, the 50-day again, do you think you should buy the dip? A lot of people are telling you, buy the dip, buy the dip. I'm saying no. I think we're going to touch the 200-day moving average. Now, that's only about a 10% drop. I'm expecting a 10% correction in the S&P 500. I'm expecting it to come in. It's got to come in. This parabolic move is not sustainable. Not sustainable. Now, will it happen tomorrow? I don't know. I bought some puts on the ARK ETF, on Kathy Wood's ETF. It's trading right now about 125, and I put some puts on. I bought them out just till the end of the month. Okay, so we're at September 3rd. I bought them for October 1st, so I have till the end of the month. I think that the market is going to come in. Now, I could be wrong. Now, if the ARK ETF gets above 130, I'll take these puts off. But I'm going to give it that little leeway because this can move 5 points in one day easily. I mean, it just is a volatile ETF. Okay, but I think it's going to be lower than 125 at the end of the month. It's 125 right now. We'll see where it is at the end of the month. I'm just telling you, we're in this parabolic move. We're in a 13-year bull run. Never have we had a 13-year bull run in the history of the stock market. Just hasn't happened. But they keep printing this money, and they keep telling you that it can never go down. Look at Janet Yellen says we're never going to have another financial crisis in our lifetime. Now, your lifetime may be longer than my lifetime, but I think I'm going to see a financial crisis, and I think it's going to be a great big financial crisis, and I do think it's going to happen in my lifetime. Okay, so what I'm telling you is just to be cautious here, just to be extremely cautious. The market is at all-time record highs, probably going to hit a new record today. I think we've hit a new record all 4 days this week. I think we have. And I think we'll probably get a new record today. But next week, do I think the new record's coming? Maybe it could. Maybe we could get a new record every day. But no, I'm betting against it. I have bought puts on the ARK ETF. It's trading at 125. I'm saying at the end of the month, it's going to be lower. I could be wrong. I get about 70% right. 30% wrong. And this could be one of those I get wrong. I don't know. Do your own research. This is just what I'm doing. I'm a stock market gambler. Now, if you want to know how I pick my stocks, I'm a chartologist. I look at charts. And I look at charts. I look at when the market's getting tired. If you like this stuff, go to stockmarketgambler.com. Put in your name and email. I'll teach you how to trade the charts. The charts are telling you. The charts are still saying we're going higher. I'm saying that the market's topped out. It's topped out. It's tired. It's tired. Now, we'll get that pullback, and then we'll probably hit to new highs again before the big crash. But I do think we're going to get a 10% pullback. Nothing crazy. 10% people are going to be crying. People are going to be scared. People get scared when the market goes down. It goes down 10%. Oh, my God. The sky is falling. The sky is falling. No, it's not falling yet. It's going to fall. And when, like I say, when it goes, oh my God, it's going to rock the world that we live in. The world will be different from anything you've ever known before when this does blow up, when this debt bubble goes, when the stock market goes, when the housing market goes. They'll probably all go at the same time because it's going to be big. It's going to be big, but not yet. Not yet. I think just a 10% correction here down to the 200-day moving average. We'll see if I'm right. Maybe I'm wrong. Maybe I'm completely wrong. I don't know. But I did buy puts on the ARK ETF today, and it's trading right around 125. We'll see what happens. We'll see. I'm Tall Mike. I'm a stock market gambler. If you like this stuff, give me the thumbs up. If you really like it, hit that subscribe button. Punch it. I want to talk to you next week, and I appreciate you guys. Man, I don't have a lot of people to talk to about. I'm not a big hit at a lot of parties because a lot of people don't like what I'm saying. I'm saying, oh my God, the stock market can go down. They don't like that. Nobody wants to hear that type of talk. That's why I'm glad you're here. Me and you, we can be real. We can talk about what's going on. And that's why I want to talk to you again next week. Punch that subscribe button so I can talk again. I'm Tall Mike. Have a great weekend, everybody. Oh, long weekend. Market's closed on Monday, right? We got Labor Day. Get out there. Do something fun. Have a good time, and we'll talk again next week. Bye-bye now.